Hello and welcome to our weekly global market outlook. I'm Tolga, here to break down the key financial events of the past week and look ahead to what's in store for the global markets. From inflation concerns in the US to geopolitical tensions and the latest market reactions, this week has been eventful. Let's get started. Last week, US equities saw a roller coaster ride. The S&P 500 hit fresh record highs midweek, but sentiment soared by Thursday and Friday. Walmart's disappointing forward guidance and the weak retail sales data already released 2 weeks ago raised concerns about consumer resilience. Adding to that, geopolitical risks including US tariff threats fueled investor caution. The S&P 500, Dow and Nasdaq all closed lower, erasing earlier gains. In terms of US economic data, the services sector entered contraction territory. Services PMI sits at 49.7 and the composite PMI sank to its lowest level in 17 months, 50.4. Housing starts plummeted 10% month over month, while home builder sentiment fell to a 5-month low. Consumer sentiment also took a hit, dropping 10% in January. Europe saw stagnation in the Eurozone with mixed results across member countries. The UK experienced stronger than expected retail sales growth, but wage inflation and stubborn services inflation tempered the positive outlook. In Japan, equities slid as the yen strengthened and inflation data pointed to potential policy shifts. Meanwhile, in China, a tech-led rally pushed equity indices higher, but the outlook remains clouded by property sector weaknesses. Geopolitical tensions were in focus, with US tariff threats and ongoing uncertainty surrounding the Russia-Ukraine conflict. On the commodity front, gold continued to its upward climb, although concerns arose as the metal failed to hit new all-time highs. Oil saw a mixed performance, with supply jitters and geopolitical risks weighing on prices. Now let's look ahead to the next few days and what's likely to drive the markets. Monday, Germany's IFO business climate and Eurozone inflation data will provide key insights into economic sentiment and price pressures in Europe. The US will also see data on the Chicago Fed National Activity Index and Dallas Fed Manufacturing Index. Tuesday, Germany will report final GDP growth for Q4, while the UK releases February's CBI distributed with rates data. In the US, focus will be on housing data, including the Case-Shiller Home Price Index and new home sales. Wednesday, key US data to watch include the durable goods orders for January and the second estimate for Q4 GDP. In Spain, Europe will release preliminary inflation data, while Switzerland will provide final Q4 GDP figures. Also, Nvidia will report its Q4 earnings, with strong results expected to alleviate concerns around DeepSeek and near-term AI capex intensity despite manufacturing constraints on GB200 NVL server racks. Thursday, the US will see the release of weekly initial jobless claims and pending home sales data. The Eurozone will also provide business sentiment data, including France's GDP growth estimate. Friday, the final big day of the week, will bring US data, including personal income and spending numbers, and the crucial PCE price index for January, which is the Fed's preferred inflation gauge. In Europe, we will also see retail sales and inflation updates from major countries like Germany and France. To sum up, markets are navigating a high-stakes tightrope walk, caught between simmering geopolitical tensions and persistent inflation anxieties and increasingly divergent economic signals. All eyes now turn to next week's pivotal events, key inflation reports, notably Friday's US PCE price index, central bank forward guidance, and political developments in critical markets like Germany's coalition negotiations and US fiscal policy debates. The US PCE releases on Friday could be the week's defining moment, potentially reshaping interest rate expectations and market sentiment. Also keep an eye on Wednesday Nvidia Q4 earnings release. What is your outlook? Share your predictions in the comments. Will inflation surprises dominate the narrative? Will political risks steal the spotlight, or could corporate reports take center stage? Don't forget to subscribe for weekly analysis and insights. Until then, keep your strategies agile and your risk management sharper. Stay ahead, trade smart.